GST in another one state, and in another state you have a different opinion from that advanced ruling authority in other state. And the other main difference is, like in India, it takes a very long time to settle down anything. Okay, it may be good or bad, but here in Gulf, it's very quick. Okay, like we hardly get time for, sometimes within a month they change some legislation, they provide some clarification, which and the impact start within a month. Okay, so yeah, this is the broader difference in India and the practice here in Gulf. Okay, so without taking much of your time, I will start with this technical session. Okay. I hope this screen is visible to everyone, right? Okay, so before starting, I will tell you some basic terminologies which we have in Gulf and which is different from what we use in India. Like in India, we use the word act. So the corresponding terminology here in Gulf is so the corresponding terminology here in the Gulf, we use it as a decree. Okay, and in India we use rules. Okay, we have an act and we have rules. Here in Gulf we have act and then we have regulations. Like in few countries they use the word executive regulation, in few countries they use the word implementing regulation. Both are the same thing. Okay, so these are the basic difference. And here we just have a single accounting, a single body for the administration of tax, and the same body administered generally be in Saudi, Bahrain, Oman, and UAE. These 4 countries we are working, and in all the 4 countries they have a single body for tax administration. It's not that we don't have a different bodies for administration of different tax. Like for direct tax, we have a different body, and indirect tax, we have a different body. In Gulf, just a single tax body, the same tax body administers even the custom. So, for a broader understanding, we have segregated session into 2 categories. One is a broader overview of UAE corporate tax, and here in UAE we have a free zone, which is a specific requirement. Or basically, I'll say that area which by specific law, wherein some specific benefits are provided for the company which are operating in free zone. So first we will go through with the overview and the unified principle which are applied across UAE, even including free zone companies. But for free zone companies, there are some special provisions which we will cover in the second phase. So as of now, if we talk about the legal framework, so we have federal decree, like as I said, like in India we have act. So in UAE we have a federal decree 47, which is the law basically, the corporate tax law. Okay. Then as of now, the Ministry of Finance here, they have issued an explanatory guide. Okay, the guide is basically just an explanation of the article which is published in the law. Okay, and executive regulation is yet to be published. Still, it is not in the public domain. Okay, it's under consultation, and hopefully very soon we will get it. So, and along the time there will be a lot of clarification guidelines which will be issued by the Ministry of Finance, maybe the special free zone authorities, okay, by FTA itself. FTA is basically the Federal Tax Authority, which is the governing body in UAE. Okay, and the same body govern direct tax, indirect tax, even the custom. I think now is it okay? I'm getting some messages from some viewers regarding the clarity of voice. Is it fine? I hope it is fine. Can someone confirm me whether is it okay or not? Still it is breaking. I think now I got a confirmation that now it is okay, right? So I think shall we proceed? Shall we proceed?
Yes, sir. It's okay now. It's okay.
Okay, done.
Yes.
So this is the legal framework. I recommend, sometimes I get, disappointed when I see that some professionals rely on some informal source of information. Okay, so basically, as a professional, we have to be very clear that we rely only on the authenticated document. We don't go through with any of the document which is available in public domain. We have to be specific that we are referring the relevant document. We are referring the law itself. We are referring the required and the regulations, which are required for the implementation. And please be clear, that we refer the information only from the reliable source. Okay, we don't go with any information which is available in any unreliable website or somewhere. So this is the legal framework. So whenever you have to refer, please refer the legal document only. So basically, this is the timeline of UAE corporate tax. Basically, as I started, told you in the beginning, here the good thing or bad thing is everything happens very quick. Okay, like even within a month, within a 1 month notice, they change the tax rate. They have implemented some regulations. Like effectively, if we see, first they publish the law in the official gazette on 10th of October. Okay, and the law's effective date is, as per the law, basically it comes out to be 25th or 26th of October. Why I mentioned these two dates? Basically, if we go with the law, so it comes out to be 26th of October 2022. But in their clarification itself, they have included 25th. So that's why we have considered both 25th and 26th. And then on 9th of December, the law was published by the Ministry of Finance. And recently on 12th of May, they have issued an explanatory guide. It is an article to article wise guide for corporate tax law. Okay, so if you have to refer something in detail for the law, then you can refer this guide. But this is just an explanatory guide. It is not, an explanation, or it's not the regulations. The regulations are yet to be published. Okay, so I hope people can understand the regulation is something which we required for the effective implementation of the law. Okay, the clarification, further extension of the law, it comes out through the regulations, how the relevant article will be implemented, the practical steps. And the effective date is 1st of June 2023. This is very crucial to understand, because this date is very, it's mid of the year. And I'll come in the subsequent slide. I will brief you how it matters. Okay, and basically, as people are thinking that it is happening in a phase-wise manner, so it's the entire this structure is based on this date only. Okay, so I will brief you in the subsequent slide how this date is of high relevance. So now the regulations for this decree. As I said, this is the law we have. Now we are waiting for the rules, which is called regulations here, which we are expecting anytime soon. Okay. And I hope you people have some basic idea about Pillar 2. And if you don't have, just have, just go through, read about it. I will just brief you of what is Pillar 2. Basically, there's an organization called OECD. Okay, and this organization works about for a synchronization or a cooperation in between the governments all around the world. Okay, and they try to find out the possible ways for the cooperation among all the countries. Okay, so that the companies stop avoiding tax, the profit shifting or avoidance of tax, or opting for low tax jurisdiction. So now they have proposed Pillar 2, and as per Pillar 2, there is a criteria. There is a criteria for MNEs, multinational companies, or any big conglomerate, which are having annual turnover of 750 million euros. Okay, so for all those companies, once this Pillar 2 is ratified by the respective country, the minimum tax rate will be 15%. And in case of UAE, we are expecting maybe from 2024, they may ratify this Pillar 2. Once it is ratified, then for these MNEs, the tax rate will be, minimum tax rate will be 15%. Okay. So I think we have done. Sure, then. Someone is asking for a explanatory guide. Yeah, you can just send us, or we will provide you some link from where you can access it. So now the taxability, because when we say it as a corporate tax, sometimes people have a perception that it is just only for corporate. Okay, so it is not only for corporate. Basically, how the way they have defined it, like tax will be imposed on any juridical person. Okay, and in juridical person, basically the person includes a natural person and the juridical person. Even the natural person will be covered under this corporate tax. No, for MNEs by default it will be 15%. As I told you, the MNEs will be which will be covered in Pillar 2. The rate of tax definitely will be 15%, because that is the minimum tax which they have to pay, be it in any jurisdiction. Okay, so it depends. Like lot of countries, they are ratifying this Pillar 2. Okay, and I hope from 2024 to 25, most of the countries will accept Pillar 2, and then for the big companies which meet out the criteria for Pillar 2, be it any part of the world, they have to pay 15% as a minimum tax. So now continue with this taxability for UAE corporate tax. So even if a natural person is doing any activity, business activity in the UAE, they will be subject to tax. But as an expatriate, I'll tell you practically how it happens, how the people, the way people from India, we come and we work here. There are two ways: either we are working here for a job, or we are working here for a business or practice, which we are doing. So in that case, we cannot just simply come here and start working here. It's not to set up something or to work somewhere. If we are coming for a job, definitely the company which is hiring us, they provide us work visa, and then only we can work here. And in the other case, if we have to start a business, like if an individual wants to conduct a business here in UAE, then definitely they have to incorporate a company. Okay, the moment you incorporate a company, then you are no more a natural person. By default, anyone who is coming UAE for a business will be a corporate. Okay, in any form of either branch, PE, or a separate entity. So it applies just only in case of locals who are having some individual business like renting and all. So these are the highlight of the entire corporate tax. We have tried to include the broader point Okay, we are not going into detailed technical analysis, article to article wise. We are just here providing you some overview. Okay, so that you can have understanding of that how the tax will be implemented in UAE. The main thing comes is the rate of tax. The default rate of tax is 9%. So basically, any company which is in UAE, which is doing any economic activity, conducting business, they have to pay 9% as a income tax, like which we have in India. They have provided a threshold exemption for the company for a taxable income up to 375,000 AED. AED is the local currency here. So the income which is up to 375,000, the exemption is there is an exemption, and the default tax rate will be 0%. But any income which is in addition to 375,000 will be subject to tax at a 9%. Okay. And as I just explained, the companies which are covered in Pillar 2, I'll again explain you. The companies which are having a global turnover of more than 750 million euros. Okay, all of those companies will be covered in Pillar 2. Okay, so in that case, the minimum rate of tax will be 15%. So it may be a case like in UAE, you may find two tax rates, in 2024 onwards. One is will be 9% for the companies which do not meet the criteria for Pillar 2. It will be 9%. The big companies which meet out the criteria for Pillar 2, it will be 15%. Now the most interesting part comes in the applicability. Like people have a lot of doubt that when it is actually starting. When the tax implication will arise on the companies. So basically, it is applicable starting from the financial year, which is starting on 1st of June 2023. So because in UAE basically the center of I'll say that world trade. Okay, like you find companies from any part of the world. They have some sort of PE, they have branch, offshore entities, subsidiaries they have created in the UAE. And basically for the consolidation purpose, they follow a different accounting period. So the local companies generally follow a calendar year as an accounting period, like 1st Jan till 31st of December. Is a basic accounting period which we find here in the maximum companies. The second one is the fiscal year which we follow in India, starting from 1st of April till 31st of March. Okay, and then for so many companies, we have an accounting period starting from 1st of July till 30th of June. Okay, so basically, the tax will apply for any company for their financial year starting from 1st of June 2023. So, for example, the companies, in their case, the financial year is starting from 1st of July 2023. Okay, so their first tax period will start from 1st of July 2023 till 30th of June 2024. Okay, and for other companies, like for example, the companies where they have a tax period starting from 1st of December 2024. Okay, so they have another 6 months. There will be no corporate tax impact on those companies. It will start only with effect from 1st of Jan 2024. Okay, I hope it will be clear for everyone, because this is, I think, the understanding that I'm getting regular, the queries. It's a basic query that when it will actually implement or it will impact the companies in UAE. So basically, it will impact for the financial year, which is starting on or after 1st of Jan 2023. Okay. So now they have provided some exemptions. Okay, which is a good thing because they still want to maintain their competitive advantage. They still want UAE to be a center of investment. So they have provided exemption for dividend, interest, income, even for the foreign PE if they have, the income is taxable in their respective countries. And then they have exemption for non-resident person, which are into the airline, aircraft or shipping, basically for the international transportation. But yes, the exemptions are always subject to conditions. So there are some underlying conditions which is provided in the law. If those conditions are met, then the entire income will be exempt. The other interesting thing which they have provided, and which I really like it, they have provided some relief. Okay, here we have a concept of tax group. So they have provided relief for any transfer within the group. So if there is any transfer within the group, there will be no corporate tax implication. Okay, and even in case of business restructuring. But again, these are subject to conditions. They have provided some conditions. I think for restructuring, the basic condition is the transfer should be at the book value. Okay, so that there is no loss, no profit, no loss. So these are some very good things they have provided in the law. Okay. Then tax computation. How to compute tax. Okay, someone is asking what is the financial year followed in UAE. Basically, in UAE, as I mentioned, generally majority the local companies like the UAE business houses, they follow a calendar year as a financial year. Okay, means starting from 1st of Jan till 31st of December. This is a standard in the entire Gulf. But as I told you, like here in especially in Dubai, we have companies from all around the world, and these companies prepare their financial for a different accounting period, so that they can do consolidation with their parent entity. Okay, that's why we have very odd tax period. You'll find n number of tax period here, accounting period basically. Both are the same thing as per the tax law. Okay, so the computation is like they have not provided any specific requirement in the law. The simple thing is that it should be basically the net profit should be calculated based on the globally accepted accounting standard. Okay, and here like because they don't have any specific accounting standard like we have in India, we have a specific accounting standard in India which are applicable for the companies operating in India. But here, because they don't have any regulating body, not regulating body, I'll say that a body like ICAI, which create a specific document for Indian scenario. So they just generally follow the globally accepted accounting principle. Like generally, a lot of companies follow IFRS, and some US-based companies they follow US GAAP. Okay, and if these are acceptable, so it's okay as per the UAE law. Okay. Now they have generally all the expenses will be allowed. Okay, but yes, there are some exclusions. Okay, some criteria like generally the expenses which are not related with the business, it cannot be allowed. And then they have put some criteria and conditions for some expenses, some cap or limitations. Interestingly, like the people who are in India, they have idea about lots of tax adjustment. Okay, but it will be really interesting to see for the people here in Gulf, because recently they got familiar with the VAT and all. Okay, so it was very difficult to digest for them with the VAT. And now this DTA DTL is going to be another tricky point, especially for the people here in Gulf who don't have any basic idea about corporate tax. So tax adjustment will be there for tax computation. Okay, loss set of one interesting thing which I really like it. They have provided set of losses for an indefinite period. Till the time you set off this fully, you can carry forward your losses, which I really find a very good point and initiative. Okay, because I think in India we have a limitation. We cannot carry forward losses indefinitely. There is some timeline. Okay, and although in UAE, I'll come out for the withholding tax application, but any foreign taxes, which any of the UAE company they have paid in terms of withholding tax in any foreign entity, any foreign jurisdiction, those will be allowed to set off. Okay, which is again a very good thing. In case of loss, I have just mentioned a point here. As per the law, there is a cap of 75%. Okay, like you cannot set off, for example, your loss in one financial year is 75,000 dirham. Okay, and in the subsequent year, your income is 100,000 uh, uh, dirham, okay, AED. So in that case, your limitation to set off will be 75,000 of your income in a respective tax period. So if your loss is 75,000 in the previous year and in the current year you have an income of 100,000, so in that case you can set off the full amount in the subsequent year. Okay. And if I change it, the numbers, like if we have a loss of 100,000 in current year, and in the subsequent year we have an income of 100,000, so in that case we can set off only 75,000, and the remaining 25,000 we can set off in the subsequent year, the next year. So after introduction of tax, the main impact which I feel it will be compliance with the TP rules. Because in UAE we have a lot of international transaction. I'll say that almost every company is involved in international transaction. Almost every company. Okay, very few you may find some, the small bakala shop and all. Like we have a small shops in. Except them, I think even those small shops are covered in international trade. Okay, because they are dealing with Oman, Bahrain, Saudi. It's like just we have an NCR territory. These countries are operating just in the same way. So this transfer pricing requirement will be a big, I think, the requirement. Okay. Now comes to the withholding tax. Interestingly, or as of now, the good thing is they have mentioned the tax rate of 0% for withholding tax, which I don't think that it will continue for long. Okay. And in this coming days, through a ministerial decision, they may provide some other rate. So as of now, because they have a withholding tax rate of 0%, so it will not be a big problem for especially the companies which are providing services to UAE. Okay. So, but yes, once this rate gets changed, then it will again create a big impact, in both territory, in UAE and as well as in the other territories which are trading with or dealing with UAE companies. Now, return and payment, here another good thing is like UAE corporate tax, they have not provided any requirement of advanced tax or something like that. There's just a simple compliance requirement is filing of annual return. And again, it will be different for every company based on their tax period. Okay, there is no specific timeline. Okay, they have just defined it that every company has to file their tax return within 9 months from the end of the tax period. And good thing is like you have the same timeline for payment of tax. So within 9 months, you have to file your return. And at the same time, or within that limit duration, you have to pay your taxes. Okay, so now this discussion was for the mainland companies, the broader overview for mainland companies. Now, in UAE, the free zone, which is a very, I think, the center of attraction, okay, which provides UAE the maximum investment or maximum business setup. Okay, so there are some specific provision they have provided for free zone. And still, there are a lot of other clarifications are needed. Okay. So free zone, in case of free zone, they have provided a condition of qualifying and qualifying free zone person or non-qualifying free zone person. And they have provided some conditions, like if a company or an entity, if meet out these conditions, then it will be a qualifying free zone person. And if not, then it will be a non-qualifying free zone person. And for free zone person, if it is a qualifying free zone person, then another test we have to do is that whether it is a qualifying income or it is a non-qualifying income. Again, this qualifying income is supposed to be clarified in hopefully in some communication anytime soon. Okay, because if it is a qualifying free zone person having a qualifying income, it will be subject to 0% corporate tax. Okay, so if you think about the tax implication in free zone, so it will be 0% only if it is a qualifying free zone person and it is a only for the income which is a qualifying income. And even for a qualifying free zone person having a non-qualifying income, corporate tax rate will be 9%. Okay. And for the non-qualifying free zone person, even the company is in a free zone, but if they don't qualify the conditions, it will be 9%. There will be no difference. Either it's a free zone company or it's a mainland company. They have provided broadly these conditions for to be a qualifying person. The first thing is to maintain adequate substance in the state. This thing I will highlight you why and what point exactly is it. Basically in UAE, what was happening? Basically, a lot of companies were doing it, using UAE as a center of profit shifting. Okay, so what was happening? Like they used to create a company in UAE just only on document, and then just moving, managing their transaction like the Europe or somewhere through that dummy company. So in that case, the concept of economic substance came into picture. So now every company in Gulf, okay, based on some activities, they have defined it based on the CR, commercial registration. They have defined it, the companies which are operating in UAE or in other Gulf countries, they have to submit their economic substance regulations. Okay, basically report which is as per the economic substance regulations. And they have to provide lots of information to substantiate that they are actually operating, they are actually having a setup in these countries. Okay, so yes, if any company which is having an adequate substance in the state, means they are complying with the requirement for economic substance. This is one condition. Then again, they are deriving the qualifying income, which is again will be clarified anytime soon through a ministerial decision. Okay. And as per the corporate law, they have a concept of they have an options to opt for corporate tax. Okay, like they cannot opt for 0% and they can directly opt for 9%. So if someone has not deliberately opted for corporate tax of 9%, and in that case they can be still be a qualifying person. Then the transactions, just to avoid shifting of profit. Okay, the transaction should be at arm's length price. Okay. And then therefore international transaction, the TP compliances must be there. And in addition to this, there may be some other conditions which may be notified in any time soon. Okay. So if any company which is a free zone company and which qualify all of these conditions can be a qualifying person, and the income which this company is deriving from qualifying sources, qualifying income, okay, that will be subject to 0% tax rate. Now, in context of free zone, I would like to brief you some interesting point is the advantage and some disadvantage of free zone. Like if a parent entity is in mainland, like mainland is basically the area which is outside free zone. Basically the entire country is mainland, and they have specific area which are designated free zone. If a company, a parent entity in mainland, and they have a subsidiary company in free zone, qualifying free zone company. So in that case, they cannot fine or is it fine? Can anyone can listen me, or the connection is okay? Okay. So if a main company is, if a parent entity is in the mainland, and subsidiary company, which is a qualifying free zone company, so in that case, they cannot form a tax group. Okay. So the disadvantage of forming a tax group will be like in one company you have profit, and in other company you have a loss. In that case, you cannot set up. Okay. And however, the good thing will be if it is a qualifying free zone company, so the tax rate will be 0. So, and if the subsidiary company, non-qualifying free zone company, so in that case, they can form a group, but the implication will be there. In that case, the non-qualifying free zone company has to pay a tax of 9%, but the advantage will be that they can club, they can form a tax group. In that case, one is having profit, other is having a loss, so they can set off. Okay, and to form a tax group, here another interesting thing is, like, you can form a tax group and among n number of companies. One company as a parent company, and then the other company can join it as a subsidiary company, and they can form a tax group. So in that case, in case of tax group, a lot of advantage, like in case of transfer of assets and liabilities, there will be no tax implication, and if they can set off their losses within the same year. So there are some conditions which these companies need to comply to form a tax group. Okay, like first, they should be a juridical person. Means that company should be based in UAE only. Okay, then only they can form a tax group. They cannot form a tax group with their company which is outside the jurisdiction of FTA, Federal Tax Authority. Then there's a condition of 95% of share capital, voting right, profit, asset. In all of cases, the parent company must hold 95% stake, be it in share capital, voting right, profit, or the assets. In that case, they can form a tax group. Other condition is neither the parent company nor any of the subsidiary company which you want to club in the tax group. None of the company should be an exempt person. Okay, the exempt person cannot be a part of a group, tax group, where the with taxable companies, a taxable person. Okay, and then neither any of the company should not be a qualifying free zone person. Okay, why they cannot club it? Because there is a differential tax rate for a qualifying free zone person. For qualifying free zone person, tax rate is 0%, and for the mainland companies or other companies, it will be 9%, because the tax rate is different, so it cannot be formed part of the same tax group. And the other thing is both not both, basically, that you can create a tax group for n number of companies, maybe 10 to 20, 50, and n number of companies you can form a tax group. So basically, for all the companies for which you want to form a tax group, for all those companies, they all should have the same financial year, and they all should have the same accounting standard. Okay. So that there is no issue in consolidation or computing the taxable income. Okay, or figuring out any tax adjustment in the form of DT or DTN. So these are the broader things which we have covered from the perspective of a mainland company and the free zone company, and the entire UAE is divided into category only. So these are the broader implications which we have highlighted. Okay, and after this, there are a few things which I would like to highlight from the Indian CA perspective. Like the major area which I feel will be required for especially for the Indian CAs is, like in the UAE as of now we have 0% withholding tax, but in India I think the rate of withholding is quite high. Okay, there are a lot of companies in UAE which are having which definitely may be having some credit in India. Okay, so to get the benefit for the tax which is deducted in India, there are some the compliance requirement, and even because we deal for some companies in Oman, and in Oman they already have corporate tax. Okay, and the same thing applies here, that we get credit for some withholding tax which is deducted in any other foreign country. So the compliance is to claim the credit, okay, which we have paid in or which is deducted in any other foreign country. It is really a very cumbersome job. Okay, it requires a very huge documentation, and that too a very specific documentation. Like in that case, for the domestic credit, by default it comes in our TDS, okay, in the form of TDS, and there is no specific requirement to comply with. But in case of international credit, like in few cases, we sometimes have to get the tax declaration certified by the tax department in the respective country, okay, and then Ministry of Chamber of Commerce in the respective country, and basis on those documents they get some provide some direct communication to the tax department here, then only we can claim credit. So I think that this thing will be really required, especially from the Indian companies perspective. The companies which are deducting TDS or withholding tax for the companies which are operating in UAE. So in that case, this documentation, I think, will be, I think, a very tough task. And I think the Indian CAs, they have to provide it. They have to find out a way how they can provide it for, for the counterpart in UAE. So that's it. And for after today's session, we will be having some further sessions wherein we, based on, and I hope till the time we will get regulations, okay, and based on the interest and the queries which we will receive due course, we will try to include and the respective provisions, because we are not going through the entire law one by one, okay. But yes, all the queries which we received based on these doubts and the queries, we will try to build our next session, okay. So now, if anyone is having any query, they can ask their queries.
Thank you, Sachin sir, for the excellent deliberation. And now I would request all the participants, if you have any queries, please write your query in the Q&A. We will take your query one by one. And do not hesitate in asking the queries, because we understand that this is the new topic and this is something very new to everybody. And I think it is a topic, professionals keep on asking me what should we do because there is too much competition in GST and income tax. So this is something new and new area in which can be discovered by you. So do not hesitate in asking the queries. And yes, as Sachin sir said, that if you guys show interest, we are also interested in having future sessions. So, sir, we have got one query from Zohaib sir. Sir, what is the status of formation of tribunals?
Tribunals in FTA in UAE, right?
Yes, sir.
So basically, they don't have the structure like us, like we have in India. We have different tribunals for direct tax and indirect tax. Okay, here they just have what they do. They, they made an appeal body or review body within the tax authority. Okay, like within FTA, they create a body or a department for appeal and review. After that, simply a session code, like like in India we have session code. So after this internal team or review, we have to go for session code, like we have in India. They don't have a concept of tribunal like we have.
Okay. I hope, Zohaib sir, that answers your query. So Chirag Bajaj is asking, what is the return filing method in UAE in light of recent corporate tax?
Okay, so basically, as of now, they have not provided the structure for filing of income tax return. But I can tell you how it actually happens broadly. Like in case of VAT, UAE is quite good, among the other GCC countries. So most of the information which we expect, it will be auto-populated, okay, and it will be a single pager return, okay, and wherein like we have in India, there are some additions, some deductions, because the people in India can easily understand. We prepare to the separate document from income tax perspective and from the commercial law perspective, company law perspective. So and from income tax perspective, some expenses are allowed, some disallowed. So the which are allowed, we can deduct it. Which are not, which are disallowed, we have to add back. So that kind of form, hopefully very soon they will publish, or once now they have started registration, so by default it will be a form on online form. Okay, having all the criteria where you have to provide information, and that's it.
Okay, great. Sir, Tanmay Shahji is asking, sir, can you tell us more about incorporation of companies in UAE and kind of companies that are there in UAE?
So regarding this, now I think our team can provide you my personal number. You can reach out to me because it's a technical topic and it's require a lot of information to provide. Okay, you can always reach out to me, any of you who need any kind of support or clarification regarding any of the country in GCC. So you
Sure,
can just reach
sure.
out to me.
Sir, is it possible for you to provide your number in the chat box to the participants?
I have
Or,
numbers.
yeah.
I have numbers for every country, so I will provide you one number right now. You can reach out to me on my number. Okay, I have provided you for. Okay, so I have provided you two numbers. I will send you my UAE number also.
Okay.
So you guys can
Appreciate
reach out to me on any of these numbers. Okay, someone is asking for the material which we can read for corporate tax.
So what we can do is, for the ease of participants, I would like to inform you that this video is available on YouTube also, so you can watch it on YouTube also. And what we will do, I will request Sachin sir to provide the material to us, and we'll create a link on YouTube itself. So the person who is watching the video, he can download the material from YouTube itself. So I think that would be okay, sir.
Yeah, absolutely fine, absolutely fine.
Yeah.
But simply, as I stated, one technique I will tell you to all of you.
Yeah.
Like
Yeah.
when we see a domain, okay, or any official site, so
Yes.
worldwide you have to refer the government site of any government around the world. So in the
Yes.
domain itself, you can get to know, that gov.ae. You understand? Like if you
Yes.
have to see the domain of any government in India, you will find it like they have a domain of .gov.
Yes.
So in
Yes.
the same way, you will find it in Bahrain, Oman, UAE, in every country.
Yes.
When you see the domain, just always look at .gov, so that you can get to know that this is the official website.
Yeah. So Chirag sir is asking, will everyone have to file their return after this? I think it is related to his previous query.
Yes, for every company which is a taxable person, yes, definitely they all have to file their tax return.
Sir, one of the person is asking, do you see possibility of tax audit in UAE, or will stat audit suffice the requirement of tax audit?
Guys, I'll tell you, basically I started around 13-14 years ago. Okay, and that time I used to think what I have studied during my academics, it will be enough. Okay, and the taxes will be same as it is. So, but one thing which I realized that taxes are subject to continuous change. Okay, and the countries and the government, they take steps based on every possible scenario. So as of now, it is not required, but pretty sure in the coming days, depending on the requirement or the ministry, they will be keep on looking an overview. They may make it mandatory. It's not a big issue here.
Definitely. Sir, what is the scope of federal tax agent for filing and practice purpose?
This is a big pain point for all of us as an Indian. Okay, because I'll tell you, fact is, if you come here in the entire Gulf, and if you will see that, especially when it comes to the F&A, so you will find, I think, more than 70-80% people you will find from India. Okay, and that too, if you find, if you look at in the CEO, CFO designation, primarily CFOs. Okay, you will find even the CEOs. A lot of CEOs, they are Indian CAs. Okay, so but for these kind of thing like the FTA agent or agent with any other tax agent with any other tax body in the Gulf. The main issue is with the language. Okay, like they have some sort of criteria of Arabic. Okay, that you have to be a proficient speaker. You know how to speak, read, and write Arabic. Okay, because official language here is Arabic. So that is the pinpoint and the pain area for all of us. Like we cannot be a tax agent until unless someone is really good in Arabic.
Oh, great. Unlike India, we have adapted ourselves to English. Like their Arabic is mandatory
Yeah, although the communication and the documentation is in English,
in
but
English.
official language is Arabic. Okay, like up to a certain level in appeal, you can go like appeal within the FTA, you can go in English, but thereafter it is Arabic.
Sir, Saurabh sir is asking, is IFRS required for corporate tax practice?
I'll say yes, because here the majority of the companies follow IFRS in the whole Gulf.
Sir, Madhurima Sethi ji is asking, can CA complete work of UAE-based client sitting in India? How to get work of UAE client? Can you share some tips to the participants?
Yeah, it can be done. It can be done, but again, for this you need to get synchronization or some sort of the partnership arrangement. Someone who is already sitting there, who is working there. Okay, in that case, it can be done. Because if you see and if you think that independently you can get work from India, because honestly, I'll tell you one thing is the Gulf is not a mature market. Okay. If we compare with the India, we are 30, 40 years forward than the Gulf, even as on today, when it comes to the accounts, audit, and taxation. Here, the companies, you can't expect to get some outsourcing. Okay. Because even we are practicing here, and we know that even having a team here, people here, to get the details and the documentation from the clients here, it's a very tough job. Okay. Because as of now, these people, they don't have an attitude like we have in India. Yeah. Now, I think last 2018 onwards, they have started looking at the taxes. Okay. So still they are not very much, I'll say that mature enough to take things, seriously. Even after implementation of VAT, now it's approximately 1.5 years. Still we find a lot of issues, like they are, following something what they want. So to get the work independently, just as an outsource, it is really tough, I feel.
Definitely. So someone is asking me, are we planning some detailed session on UAE tax? So that depends on how the audience they give, whether they like the session or not. And we'll also need to ask Sachin sir if he has got, he's also very busy, so he need to make some time out. So we'll discuss with Sachin sir, and if if we are planning something, so definitely we all will let you know. Sir, Saurabh sir is asking, if CA enter with ACCA IFRS diploma would get opportunity in Dubai?
Yeah, I think yes, you can get it. Depends.
Yes.
If
So,
anyone is needed any kind of help now, so I'll text my email ID also. You can share
sure,
your
sure.
CV,
Yes.
and I will try to circulate it in my circle. I can
Yes, sir,
try
please.
what I can do best.
Yes, please share your email ID.
Okay, I will text you.
Okay. So sir has shared his email ID and number. So and for the PPT, we'll contact sir and take the PPT. And I'll share a link. I'll make a link and share it on the YouTube, so you can download the PPT from there. And I am sharing the YouTube link also to all the participants. So if you think you have missed out something and you want to see the recording again, PPT. Okay, I am sharing the email ID in chat box. I've shared the email ID in chat box, and since all the queries have been taken, Zoebji, just now I've shared with everyone. Please see again the YouTube link and the PPT. I hope you all have got it now. And sir's mobile number also I am sharing once again. So I think, sir, there is no other query. And should we move towards winding up the session?
Absolutely. Thanks a lot,
Uh,
everyone.
yes. Yes, thank you, sir, for taking this topic. Indeed, many participants are, in fact, many CAs also and many professionals also are interested in UAE taxation because it opens new opportunities for many. I hope this session will help you, to go ahead if you want to go ahead in the field of Dubai UAE taxation. So thank you, Shrikantji. Thank you, Tanmay. Thank you, sir, for taking up this session. So now I am winding up the session. Have a nice day, everybody.
Thank you. Thank you so much. Thanks, everyone.